On May 14, Trump lashed out at the Federal Reserve, demanding that Chair Jerome Powell cut interest rates as soon as possible. This marks the 13th time in just over 3 months since taking office that Trump has publicly criticized the very man he nominated for the position. After reaching a new tariff agreement with China, Trump immediately turned his focus inward, demanding that Powell cut rates right now. On his own social media platform, he openly vented his frustration, arguing that U.S. inflation is already low and that Powell should cut rates immediately, otherwise, he's holding back America's economic boom. That's quite an accusation, but Powell remained unfazed, calmly suggesting they should wait a little longer. The dynamic was almost comical. Trump, like an impatient young monk, buzzing around the stoic elder, Powell, deep in meditation, while Powell, the unshakable old monk, didn't even bother to lift an eyelid. Why is Trump so desperate for rate cuts? And why is Powell so cautious? Hey everyone, I'm Lily, the rebel queen who loves playing with U.S. stocks. Since Trump took office, America's soaring debt and fiscal problems have given him headaches. As of now, the national debt has reached a staggering $36 trillion, with the debt ceiling being raised year after year. Earlier this year, the debt ceiling was set at $36.10 trillion, but by mid-January, the U.S. had already blown past that limit. Treasury Secretary Janet Yellen warned that if Congress doesn't raise the ceiling by July, the U.S. government will face a technical default. Even though this is Trump's second term, inheriting such a financial mess feels like a game over from the start scenario. And let's be real, this is probably Biden's parting gift to Trump. That 80-year-old grandpa, who can barely walk without tripping, somehow still managed to leave a ticking time bomb for Trump on his way out. Now, the bomb is in Trump's hands, and a Fed rate cut could buy him some time before it explodes. Can you blame him for yelling at Powell? If you were holding a live grenade, you'd be screaming too. So how exactly do rate cuts extend the fuse on debt? Rate cuts work by adjusting interest rates to influence the flow of money in the market. These rates refer to both deposit and lending rates. Rate cuts don't actually increase the amount of cash in circulation, but they do influence people's financial behavior. When rates rise, your cost of using money increases. When rates fall, it decreases. Normally, if you borrow $10 from Xiaoming to buy a soda, you just pay back 11. As more people realize it's a good deal, everyone starts borrowing from Xiaoming, so Xiaoming raises the borrowing cost by 1 yuan. Now borrowing 10 means paying back 12. Previously a soda cost you 10 plus 1 equals 11, now it's 12. So you think it's not worth it and stop borrowing. Others also stop borrowing when they hear Xiaoming raised rates. Rate cuts are the exact opposite. Xiaoming sees nobody's borrowing, so he lowers the borrowing cost. Now borrowing 10 only requires paying back 10.50. You hear this and get super excited, running to borrow 200 all at once. Others hear rates are lower and come rushing to borrow too. Xiaoming lowering borrowing costs is essentially a rate cut. Whether Xiaoming raises or cuts rates, it doesn't actually change the total money supply, but it does guide market behavior. This is how interest rates steer the market, and the Fed is essentially America's version of Xiaoming, the only one who can decide whether to raise or cut rates. Rate cuts lower the cost of using money in the market, meaning less interest paid on loans, and this is exactly why Trump keeps pestering Powell with U.S. debt now over the ceiling. While $36 trillion is terrifyingly huge, they can't just default, right? A default would destroy U.S. and dollar credibility. As the saying goes, trust is like a piece of paper, once crumpled, it can never be perfect again. So Trump is desperate for Powell to cut rates to avoid being the one who crumples the dollar's golden reputation. In 2024, U.S. debt interest payments alone hit $1.1 trillion, and just a 1% Fed rate cut could save the government $400 billion in interest. Meanwhile, Elon Musk went on a firing spree, axing over 100,000 federal workers, which, counting their families, pissed off about 500,000 people. All that drama only saved $165 billion. Yet, a single nod from Powell could save more than double that. No wonder Trump's losing his mind. So why won't Powell just do it? Unlike China's central bank, which answers directly to the government, the Fed is fiercely independent. Its 7 board members, including the chair, serve 14-year terms, and once appointed, even the president can't fire them without Congress's approval. They outlast presidents, just like the Supreme Court justices. So no matter how much Trump threatens Powell, the answer remains, sorry, you don't own me. The Fed operates with its own established framework. It doesn't exist solely to serve the federal government, but rather serves all American people and the nation as a whole. Imagine America as a tetrahedron, with the federal government, courts, Congress, and the Fed as its four vertices. This complete tetrahedron represents the United States of America, while the administration is merely one representative part. Now some curious viewers might ask, Lily, where does the Treasury fit in? Well, it's at the kids' table as a core federal department directly accountable to the president, sharing the same pants with Trump, far less independent than the federal. The reason Powell hasn't cut rates yet is that in the Fed's rate cut evaluation, one crucial indicator remains highly uncertain: inflation, officially the inflation rate. Why does the Fed care so much? Because its dual mandate is maximum employment and price stability, and inflation directly impacts both objectives. First, let's understand how inflation actually occurs. Remember our friend Xiaoming from the borrowing story. After Xiaoming lowered interest rates, more people came borrowing at low rates and spent all that money at shopkeeper Xiao Li's market. But with so much money chasing limited goods, Xiao Li thought, such demand, I'll raise prices for bigger profits. So he jacked up all prices, and that's inflation. The Fed is like Xiaoming when it cuts rates. More money floods the market, but goods remain unchanged. More dollars chasing fewer goods naturally drives prices up. This directly conflicts with the Fed's price stability goal. Higher prices raise business costs. Workers demand raises. Some employers can't afford it and lay people off, increasing unemployment, hurting the Fed's other performance metric. America has suffered 5 major inflation crises, each causing price surges and job losses, not to mention smaller inflationary episodes. Thus, guided by these dual mandates, the Fed treats rate changes cautiously. One wrong rate move, making food unaffordable or jobs scarce, and 300 million Americans will drown them in spit. Now, inflation isn't all bad. Moderate inflation can actually help stimulate economic growth. How so? Consider this: after working hard all month, you find at the supermarket, last month $100 bought 50 Cokes, now only 40, prices rose. You realize today's $100 buys less than before, fearing next month's prices may mean only 30 Cokes. You splurge on 2 months' supply. The store sells more at higher prices, boosting profits. Scale this up, and it stimulates the whole economy. Basically, preemptive buying to beat price hikes shifts society from saving to spending, and consumption drives economic growth, hence the Fed's 2% inflation target. April's inflation hit 2.3%, the lowest since 2021 but still above target. This worries Powell. Will cutting rates keep inflation at 2%? As I explained, rate cuts may raise prices, preventing inflation from falling, inviting public criticism, hence Powell's resistance to Trump's pressure. That's all for today's video. If you enjoyed it, like, subscribe, and comment. I'm Lily, the rebel queen who loves playing with US stocks. See you next time.